Hello, everyone. Welcome to another ShareWise webinar. I am Caitlin Chung, and today I'm fortunate enough to be joined by SKS Technologies, and we have here the CEO, Matthew Jinks, and the CFO, Gary Beaton. Thank you so much for joining me today.
Thank you very much, Caitlin. Thanks for having us.
Thank you.
So today, sorry, I'm just echoing here. Matthew and Gary will run through an investor presentation with us, and then we'll take any investor questions. So I'll hand it off to you, Matthew, if you'd like to share.
Yep, thanks very much, Caitlin. I'll just share my screen. Okay, so thanks everyone. Thank you very much for taking the time to joining us this morning. So as Caitlin mentioned, I have with me Gary Beaton, who's the Chief Financial Officer of the company. So what we'll do is I think I'll just start with, for those that are a little bit unfamiliar with the company, just giving you a brief explanation of what we do, where we do it, and who we do it for. So we are a company that is located in all major states of Australia. You can see there in the map in the bottom left-hand side there. We do work in Tasmania as well, but we typically service that from either Melbourne or Adelaide. The services that we provide are audio-visual communications and electrical network technology solutions. We also do building and energy management solutions, as well as ongoing service and maintenance. We do it in environments right across the entire economy. So it's all typically based around commercial, corporate, defence sector and mining sector right across the country, and a little bit different state by state. And we've been working very busy over the last few years to ensure that we're doing that for a blue chip client base, of which you can sort of see a number of key customers there, which are very strong brands right across the country. So, I'll just hand it to Gary to run through the financial slides.
So if we just look at the financials, and this is probably looking back, so we don't want to dwell on it too much, but we can see when we look at all of our graphs that all of our performance metrics have improved over the last 4 or 5 years. We can see in regard to FY23 that we did make quite a deliberate decision there to invest heavily for our rapid expansion. And it's probably fair to say that we are seeing the results of that in our first 4 months results, which we'll see on the next screen. So very significant growth in revenue, improvements in EBITDA, cash flow, net profit before tax, after tax, and of course, debt improvement. And we're very pleased to, which we released to the market recently, our increase in CBA financing facilities, which is there to support our growth.
Thanks, Gary. So just moving on, this is probably one of the most important slides that I'd like to share with the audience today, which is around our sort of strategy and the investment benefits. As Gary mentioned, over the last couple of years, we've invested heavily back into the business to excel in a number of areas and initiatives and geographic expansion. And you can see at the bottom there, approximately $3 million has been invested back into the business with these initiatives. We have had a very strong focus on organic growth over the past 2 to 3 years. We do maintain an opportunistic approach to acquisitions, and you'll see back in 2021, we acquired a company called ASX Technologies Group, which has been a really successful integration and acquisition for us. We have significantly grown the business geographically, so we've had a deliberate approach to build our interstate offices and build the work on hand in some of these newer states like Western Australia, Northern Territory, and Queensland in particular. We've had a deliberate focus in certain market sectors, in particular around the rapidly evolving data warehousing market, as well as significant defence opportunities around the country, and to a lesser extent, the mining sector in sort of the northern parts of Western Australia. You can see there in the middle of the circle, we do have a revenue target in FY24 in excess of $100 million. So that's significant growth when you sort of look at the last couple of years. We've sort of gone from 34 million to 67 to 83, and this year the expectation is that will exceed $100 million. And as Gary mentioned at the AGM last week, we were pleased to announce our 4-month financial performance on the right-hand side there, where we've achieved $34.5 million of revenue and an EBITDA of 1.8 million and a net profit before tax slightly over $1 million. Another really key metric for our business is our work on hand profile, and we've really been working hard over the last couple of years to transition this work in hand to align with the targeted areas and market sectors that we've been pursuing. You can see that the work on hand there has been significantly growing over the last few years, 104.8% compounding since June 2020. In June 21, there was a slight uplift because of the ASX Technologies Group acquisition that I mentioned that brought with it $10 million worth of work in hand. But since that time, it's been all organic from that $26 million mark to what is now $81 million. And again, last week, we announced a significant project win for us, which was a $30 million project in the data center sector. And just over on the right-hand side there, you can see where we've noted that. So some of these areas like defence, smart building technologies, and in particular data centres has been a real focus for us, and you can start to see that translate in our work in hand wheels. Another really focus area for us was getting closer to the end user. So what we do in lots of different environments, and we do have a broad customer base. Sometimes that is direct with the end user, and often it goes through a principal contractor. But you can see there from August 2022, where our end user customer base was really quite negligible. Over the last sort of 12 to 18 months, we've been working hard at building that end user customer base. And you can see there now in November 2023, it makes up almost 16% of our work in hand. And I think also too, on the work in hand by sector wheel in the bottom left-hand corner of this slide, you can really start to see the shift with significant work on hand in data centres, defence and healthcare. Another key metric, obviously, for us prior to getting to work in hand, it's obviously our pipeline of opportunities. And again, we've been working really hard in certain particular sectors to grow that pipeline of opportunity, namely data centres and defence. And you can see there that we have a significantly growing pipeline of opportunity, and it is in the areas that we have focused and targeted on. And obviously with the view that will ultimately translate into work in hand. I just wanted to briefly touch on in August of 2022. So last year we joined in partnership with an Indigenous identity and created a company called SKS Indigenous Technologies. SKS Indigenous Technologies is 51% owned by an Indigenous identity, a gentleman named Chris Johnson, who's the managing director of that business. And it's 49% owned by SKS Technologies Group. And we're sort of pleased to report that a lot of the initial targets that we had set around Indigenous participation and community involvement programs, we've far exceeded that within the first 12 months. We are a Supply Nation certified business, and there is a rigorous process to go through in order to become Supply Nation certified. And we do have a significantly growing work in hand profile within SKS Indigenous Technologies, as well as a significantly growing pipeline of opportunity within that business. And while it is a for-profit organisation, it is structured to enable the inclusion of Indigenous business direct data and confirms that a business is Indigenous owned and audited annually, which is the Supply Nation certification. So the executive summary of where we find ourselves at the moment, we have invested heavily into the business over the past 2 to 3 years to support a lot of the initiatives that we've embarked on. We've recruited a number of specialist market sector teams right across the country to focus in these areas. And we can now actually start to see that translate when you look at our first 4 months financial performance for FY24 and our expected revenue targets. It is a strong focus around the significantly growing data center market, and our expectation is that's going to continue to grow, in particular with the introduction of AI and data storage around AI. And we have a significant focus in the defence sector, and we're seeing some significant wins, in particular in South Australia and Northern Territory on some of the larger Australian defence bases. We've built and recruited significant relationships with end user clients, which in our space is how we gain higher margins and repeat work. We have completed the national footprint of all of the offices around the country to target these marketed sectors. And obviously, with a significant growing business as we are, we're always upgrading our systems and processes in order to keep up with the significant momentum of the company. We are definitely starting to see the benefits of all of these initiatives now. We're starting to see a significantly changing profile of work on hand that is evident with the strategy of the business. And we're starting to secure some really large new contracts now off the back of that strong foundation that's been built. We have a significantly growing pipeline of opportunity, again, aligned with the strategy. We have the support of our financial institution, which is the Commonwealth Bank of Australia. And we've just, as Gary touched on, we've just recently increased our financing facilities to support that growth. And they've been a fantastic partner. And as I touched on with SKS Indigenous Technologies also, that was an initiative that we kicked off in August of 22 that's really starting to gain momentum in its own right. And so for FY24, our targeted revenue performance of in excess of $100 million, we believe is definitely achievable. We announced our first 4 months financial performance, which we believe is trending quite positively in terms of the initiatives that we've embarked on over the last couple of years. And we sort of expect that with a growing work in hand profile that not just FY24, but FY25 and beyond will continue to see significant momentum for the company. And that's all. Thank you.
Thank you so much, Matthew and Gary. That was a really good insight into the company. And for those that have joined us later, please feel free to pop in your questions in the Q&A chat box down below and we'll get to them. So to start us off, I have a question for you, Gary. How did you guys maintain such strong financial performance even throughout COVID?
So for us, COVID was, it was assisted our business in the sense that it was a high demand for a lot of the services that we had, particularly in the audio-visual space. So we're able to grow the business through that. Obviously, we did have a drop in revenue and we did have the benefit of JobKeeper. So we were able to retain our workforce and we saw increased customer demand for our services, which is not the case for all industries, of course.
Yes. And a question for both of you, would you ever look to expand overseas?
I think I can answer that one, Gary. I think we're seeing significant momentum within Australia at the moment. I think interstate offices are maturing quite nicely, but I think we'd like to see that bedded in probably for a little bit longer before we started to take the blinkers off and potentially look at New Zealand or beyond. So I would say, as we sit here right today, there's probably a lot more opportunity to get out of what we've currently embarked on within Australia before we sort of, take things offshore.
And what does the competitive landscape look like in Australia?
Yeah, look, it's a little bit different state by state and service by service. We do have a couple of key competitors. I guess when you get into the scale of some of the contracts that we're embarking on now, the competitive landscape reduces significantly because there is a significant capability and technical resource required in order to deliver these sorts of projects. So at the higher end, it's that the competitive landscape is your sort of typical 2 or 3 competitors. So it's I think with a growing technical capability, the competitive landscape is starting to reduce for us a little bit.
And we have a question from a viewer here. Is the gross margin similar across the different end market segments, such as defense and data centers versus your traditional customers?
Yeah, so what we're seeing at the moment within data centers and defense, the margin is a little bit better than you would traditionally see in that sort of corporate and commercial environment. going direct to the end user will always see a higher margin, because there are other things that you don't need to do when you're working directly with an end user, as opposed to going through a principal contractor. And hence, that's why, that has been a significant part of our strategy to get into these and build teams so we can get capability into these market sectors and approaching the end users so we can drive higher margins. And that's part of the underlying strategy of the business.
Look, Caitlin, it's probably fair to say that all of our initiatives have really been with an eye very closely on the gross margin.
Okay. And I know you've mentioned that there's much higher profit margins when targeting the end user. Is there like a target within the next 5 years of the proportion you want that to be part of your customer base?
Yeah, look, it's a difficult thing to put a number on whilst the business is significantly growing as it is. So, we would love to see that end user piece of the pie continue to grow in proportion as the business grows. But obviously, if you secure a $30 million contract, which is a significant contract in terms of the overall size of the company, that can affect those percentage numbers. So everything that we do, I can say, however, is that it's always got the eye on the end user. So if we particularly embark on a project that is through a principal contractor, ultimately what we're trying to do is then secure that end user. We don't just want to do a project and leave. We want to do a project and stay.
Ultimately, with a service and maintenance offering, that's a view of really trying to build a recurring revenue stream. And with that service and maintenance offering, you're really then looking for future upgrades in more of a negotiated position. So that's sort of part of the strategy, the major project, and then really trying to convert that in customer to a service and maintenance ongoing customer.
Right. Okay. And how has your acquisition of the ASX Technologies Group created synergies within the company as a whole, and what benefits has it specifically brought?
Yeah, so it brought resource capability and really plant and equipment as well as $10 million of work in hand that we could then leverage from. So that was back in 2021. Again, we were sort of still in that COVID, sort of coming in and out of lockdowns and things like that. So it was a really great way for us to build a foundation of technical resource capability, and then leverage our existing relationships to then continue to grow it. And it's really been quite successful for us.
And this year, a buzzword has been AI. I wanted to ask, has that had any impact on you guys as a technology company?
Yeah. Look, absolutely. And as I touched on, if anyone's sort of familiar with the data center space, there's literally billions and billions of dollars that are getting spent in building data warehousing space. There's some significant brands like Microsoft and Amazon and these sorts of large players, as well as a whole myriad of others that just continue to build data warehousing space. And we haven't really even sort of touched on the data storage that's going to be required for AI. There's lots of numbers being thrown around that could be, 5 times, potentially 10 times the additional data storage space. So we are seeing a significant amount of activity in that sector, and it's all in preparation for the storage that's going to be required for AI.
Right. Okay. And as SKS is quite involved in the defense sector, may I ask, have you guys experienced any impact from what's going on in Ukraine and Israel?
Not directly, other than what we're seeing in some of the defence bases is that they are enhancing their capability, and they are introducing a number of other countries to come and train in Australia. And I guess when you invite that into the country, obviously the facilities need to be upgraded and refurbed. The communications and communication networks that support those defence bases, which is the space in which we play, there is significant money being spent in raising the bar on these facilities, and that's really what sort of affects us. But the conflict itself is not really affecting us, but it's really more, I guess, the government's approach to the facilities.
And another question for Gary. You guys have a significant increase in work on hand. How do you plan on financing this?
So at the moment, we're operating quite comfortably within our current facilities, and we're more than confident that we can increase them if we need to do so. For us, part of obviously the operations part of the business is making sure we structure our projects accordingly with an eye on cash flow. Making sure in the day-to-day business we are obviously, across our progress claims, across our collections. And if you have a look at our balance sheet, which I just happened to, or our accounts on note 16 of our accounts, we have an unearned revenue piece that sits in our balance sheet. So, which is quite a significant number in terms of driving cash flow. So we also look to manage that. So keep an eye on that over the next half and the next year. So really, all of our activities are really focused on that cash flow. But in the event that we think we need to go to the bank, we're still more than confident we can increase those facilities if required. But typically, we think we can fund a lot of our growth out of our existing cash flow through how we go about managing it. And one of the things that we see in our particular business is we tend to have better trading terms with our customers than we do with our suppliers. So that also helps with cash flow.
Okay. And one final question from me. What can we expect from SKS in 2024?
Well, as I mentioned, we're very excited about where we find ourselves. We've done a lot of hard work and invested a lot of money over the last 2 to 3 years on a lot of initiatives right across the country to really set the foundation for where we find ourselves in this current financial year. So we would like to think that the financial performance that we released last week in terms of the first 4 months will be a good reflection of how the year is going to trend, and hopefully then take that into FY25 as well.
So in other words, we're still certainly expecting significant growth within the business off the back of the work in hand, and also, continued improvement across the various branches in the country. So there's still a lot of upside in the business as it stands today.
Well, it was very interesting to hear from both of you. It was a pleasure having you both on. Thank you so much, Matthew and Gary, and thank you so much for everyone that's watched. The recording will be uploaded on YouTube for anyone that wants to revisit it.
Great. Thank you very much, Caitlin, and thank you to the audience.
Thank you.